Right, let's get going. And so let me walk you through what I'm seeing in this market, and then we can take it further. So this is a weekly down. So we've had this incredible climb up here, and a sharp whip down end of July, early August. Um, so we've had I think it's for the last couple of weeks just climbing back up into this 41,000 mark. So the reason why I am bearish at this stage, I have been shorting this, but I'm just back really small trades, tight stops, and just backing off if they don't work. If you put this fib ratios back, you can see all the resistance up here and the trend line resistance across the top, which we are punching through as we speak today. Um, but if you look at the monthly, they're completely flat for the month. Here we are, 20th of August, and we're marginally lower than we kicked off on the month. So if we finish like this, so we're not that far off the end of the month now, or close anything lower, anything under this 41,000. I think it's going to open the floodgates for this to pull right back. You can see this channel I've got at the highs here. So we've had two touches or two or three touches of this channel since January 22. So you can see if the volume is coming off, slowly coming off. Yeah, if we get a nice low volume month this month, which August typically is anyway, and close flat or just nudge into these resistance areas and sell, then I think we're going to start this retracement. Basically, the main reason why I'm so bearish this market is because of this. If you look at the falling dollar basket, so that's coming out of this support area with the rising gold. In fact, gold's quite flat for this month as well. Gold's actually that's a weekly, isn't it? Yeah, weekly. We're quite flat on the week. And finally, if you look at 20-year US notes, you'll see these getting really perking up. So if we break that high, this 20-year note could really start to break up. And so what you've got is continual de-dollarization, where oil is not a is not a also the dollar's not a petro currency anymore since the Saudis didn't renew the contract. In other words, the Saudis are not committed to trading all their oil in dollars. So that takes some of the support away from the dollar. The bonds are running up because they're a safe haven. A lot of traders are taking profits in stocks and parking the money in bonds. So I think we're potentially heading for a perfect storm. We've got Fed minutes tomorrow, 2 hours for tomorrow's end of the trading day, and then we've got I think we've got a Fed decision early September. All right, so just because interest rates might come down doesn't mean say markets might go up. In fact, more often than not, markets fall when interest rates are falling. Okay, so if I'm right, then at the moment I'm just out of I've been taken out of a short trade. So I will just back off and wait and see, wait for this daily chart to send a sell signal. You can see one of the another reason for me shorting up here is when this thing shorts, it blasts down. I mean, on the 1st of August, we came from, well, day before we were at 41,250. The next day we were nearly 1,200 pips lower. So the risk-reward ratio of shorting, if this market does give up, risk-reward ratios are really, really healthy. The trick is to do one or two things. A, do nothing until you get a short signal on the daily chart. We've not even had a lower close till since 12th of August. Or, just short as high as you possibly can and see if you can stay in it. Okay, and if they're not working, just stop doing it. So I now need to wait and see if I can get a lower close at the very least in this daily chart. Otherwise, I need to do nothing. At the very least, we get the Fed minutes out of the way. So that's the FTSE. This is sorry, that's the Dow. That's the foot. This is the FTSE. See, the FTSE's come off. That's the sell signal of the FTSE. That's completely engulfed yesterday's price action. So that didn't even tap into the resistance. So there's quite a significant difference between this FTSE and the Dow. Let's look at the S&Ps. Yeah, S&Ps are flat for today, but likewise, they're into this drop zone from the 17th of July. So any significant low close on that could track that down. All right, in the meantime, we've got weak oil. So oil crashed, got close to the 50-day average, and now we look as if we are coming down to 70. If we break this low, I can see is coming down to at least 70, 73 at the moment. And if we really start to tumble, I can see this coming down to 67 and 63 and maybe even 60. So a series of higher lows and lower lows and lower highs. So this is looking rife for potential more higher breakdown. The gold we've seen is 25.15 roughly. So next stop on this one, it's all 2,500 today. So next stop is 25.38 and we could be heading for 2,600. Volumes have been very healthy today on a touch of 2,500. Right, quick look through some stocks we've got. BT. This is what concerns me about these markets. We're hitting resistance levels and they just well, we had 3 hesitant days from Thursday the 15th until this Monday, and now they just let go. So if a stock like BT can't hold up, then you need to be careful. Let me stay in this sector a minute and look at Vodafone. Yeah, so Vodafone is very touchy up here as well. Sitting on support, but start closing on the 74 and that could tip over. You just got to be, I've been taking shorter targets this year, not hanging around for runners. Prudential, that has perked up from the 610. It's holding 650 just, but another start closing on the 650 and that's going to come lower again. Volume has improved some on this drop, but it's not significant. So be very wary of that one. Wheat is attempting to hold here on the back of that weak dollar I just showed you. But it's still a pretty pathetic response to a very weak dollar. So yeah, overall, I'm still very bullish this week. But wow, I mean, watching it, it's a very, very slow weak grind. So this, if we break 530, 525, then that's lower. Let's look at a couple more bellwethers. One moment. I don't know if I'm sure. Oh, here we are. So Lloyd's, yeah, that's quite perky. So we saw a recent high of 60, 61, touch 59, 60 and pull back again. It's not bad. HSBC. Yeah, so a nice little run up from the £6 mark to 660. Good little 10% in not that long, but it's hit the 50-day average and dropping back again. Barclays is, oh, where's my Barclays? That's weird. It's not on that list. Let me put it in. Yeah, so I've got this as 236 as a problem area, and that's certainly on this dip. We've come into, or we've not even hit my main resistance area, and that's beginning to drop off some. So just got to be really careful on these markets. Yeah, the autumn is typically, late summer, early autumn is typically very volatile anyway, and this year appears to be no different. Um, so I'll leave it there. Let me just go back to my main board a second. A couple of other things we're looking at. Tullow at touch 33 not so long ago, and here we're struggling at 25, 27. Uh, if you're in this, be very careful because we're coming down on increasing volume. All right. What else am I look for? Let's look at the euro oil here. So the euro is really perky. We're almost back to December 23 resistance. Final look at pound yen. That drop on the pound yen to 181, or no, sorry, 180. Saw that go into 192. So this is this is a potential buy zone here. If we can hold 190 again, then this could perk right back up. So we've had a decent bounce. This could start to leg down. If we can't hold here, this is going to leg down again. And the yen pairs, the yen tends to get bought when the markets are spooked and the markets are dropping, right? So just be careful. But I would back off of that and see if we can come back and test 185 and hold at 185. Otherwise, this could come tumbling all the way back down again. So very sharp drop into 180. If we can't hold here, like I said, we could break this low here and keep going. So I'm suggesting that you are super cautious at this stage and reserve your capital. because at the moment the only thing that's getting bought is gold and bonds. Well, very few markets are getting bought is gold and bonds, which is bearish. Hope that helps. Take it easy. So if you really want to engage this market, try and catch the gold on a dip. Otherwise, I'm still going to persist with shorting these index highs at the highest possible level I can. But where we tomorrow, 2 hours before the US market's shut, that's going to be really interesting. If you bracket the sort of range you get at that period and see which way it breaks, up or down, that could give us a clue as to what we're going to see into late summer, early autumn. All right, thanks for joining me, and I'll see you soon.